So if you want to know how much the market will return this year, look no further than today's trading activity. It may hold the answer to that. Paul Hickey, the co-founder of Bespoke Investment Group, is here now to tell us why. And Paul, is it really as simple as goes January, so goes the year?
If only it was that easy. The history shows, though, if you look back at the first day of trading, there is some correlation. You have about a 70% tendency for if the first day is up, for the rest of the year to be up. But then, we go into the first 5 days, and then we go into the first month. And the thing is, things change as the year goes on. And if you remember, the first month of last year, January, was a horrible month, and we had a great year. So you can't focus too much on this. You just got to roll with the punches as the year progresses. But it is shows underlying demand for stocks.
Okay.
Like, just if you saw last Thursday, the last day of the year, there's a sentiment where there's a big sell-off at the end of the day, and it's sort of the tendency on the part of investors, because they're looking at the market and they're going, I have these gains, I don't think it's going to be as good next year. So there's a lot of negativity on the market, and sentiment isn't quite as bullish as people would have you think.
All right. One thing I noticed is the Russell 2000 beat the S&P 500 by about 1 to 2 percentage points in 2009. But within the S&P 500, the smaller members actually fared better than the bigger members.
Right.
What does that tell you about 2010?
Well, the thing is, what you want to see is smaller stocks doing better, because when the economy is growing, smaller companies are going to do better. And towards the end of the last half of the fourth quarter, we saw a lot of strength in the small caps, and as well as the smaller, large cap S&P 500 stocks. So that's a positive tone we want to look for. Some other things the trends that were in place last year that made us positive and still make us positive now are the market indicators. Breadth continues to hit new highs, even ahead of the market, which shows underlying strength for stocks. And then you have the net new highs, which was positive, and it's still neutral. We're waiting for more confirmation on that. And so that's a little bit of a neutral aspect here. And then volume, whereas everyone's been commenting on how volume is so far down,
right,
and that this rally is just running on fumes. The thing is, you got to remember that in 2007, 2008, we had 3 more large brokerage firms, we had thousands of more hedge funds, and when you have more participants in the market, you're going to have more transactions, and when there's less participants, there's going to be less transactions, so that causes the volume to go down. So what we like to look at in the volume is volume breadth, so on the volume on up days versus the volume on down days. And we're still seeing on big up days and just regular up days, we're seeing better volume than on the down days.
Also, the market tends to see better volume on down days overall than on up days in general, right? There's more massive action on days where the market
on a big
goes
down day, but what we've seen since the March lows is when the market's up 1%, the average volume on 1% up days has been higher than on 1% down days. So that's something that still shows that people want to get into stocks.
Okay, what about leadership? That's one thing we haven't talked about yet. Financials on a relative strength basis have been lagging behind since about October.
Right.
Is it concerning that they led us on the way up and led us on the way down and have not made a comeback yet?
Well, we like to look back at the last period, coming out of the tech wreck in the beginning of this decade. And back then, the tech was the strongest sector off the lows. And what happened is towards the end of '03, the sector started underperforming. And there was a lot of fear on the part of investors that if tech can't keep up, the rest of the market's going to go down. And what we saw is from the end of 2003 till almost the end of the bull market, tech was underperforming the market the whole time, and the market still did good. So what you have to know is, the financials, it would be nice to have them, but they're not necessarily needed.
Not only that, but tech has certainly made its comeback if you look at what happened last year.
Yeah, tech has been great. It was actually the only sector that outperformed on the way down and outperformed on the way up. So there's a very strong demand for stocks in that sector.
All right, so we'll see what the first trading day of the new year holds for us.
All right.
Thank you so much.
Okay,
I've been speaking with Paul Hickey, co-founder of Bespoke Investment Group.